Let's get ready for the Tennessee real estate exam with 100 questions on state-specific laws, principles, practice, and more. And don't miss what's happening in the bottom corner. It'll be key to your prep. We'll tell you how in a minute. Now let's get started.
Let's start with a review of Tennessee real estate law and practice. Fair housing laws in Tennessee. Which of the following groups is not protected under the Federal Fair Housing Act in Tennessee? Is it A, race, B, gender identity, C, national origin, or D, familial status? The answer is B, gender identity. Although gender identity is often protected under state or local laws, it is not one of the explicitly defined protected classes in the Federal Fair Housing Act. In Tennessee, what is a primary responsibility of the Tennessee Human Rights Commission under the Fair Housing Laws? Is it A, issuing real estate licenses, B, investigating discrimination complaints, C, setting property tax rates, or D, enforcing building codes? The answer is B, investigating discrimination complaints. The Tennessee Human Rights Commission is tasked with investigating complaints regarding housing discrimination to ensure compliance with both state and federal fair housing laws.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsey.ai for immediate help and a free study session with Birdsey, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
Under which circumstance might a Tennessee landlord lawfully refuse to rent to a prospective tenant? Is it A, if the tenant has a disability, B, if the tenant has pets in a no-pet building, C, if the tenant is of a different religion, or D, if the tenant has children? The answer is B, if the tenant has pets in a no-pet building. Landlords can enforce no-pet rules provided they comply with exceptions for disabilities or service animals. Such policies do not violate fair housing laws unless applied discriminatorily. What is an example of steering under Tennessee fair housing laws? Is it A, encouraging residents to move for personal profit, B, suggesting neighborhoods based on customer preference, C, directing families with children to certain buildings, or D, offering varied rental prices to negotiate deals? The answer is C, directing families with children to certain buildings. Steering involves leading prospective buyers or renters to specific neighborhoods or buildings based on discriminatory criteria, such as family size, which is illegal under fair housing laws. What is redlining as it pertains to fair housing in Tennessee? Is it A, an illegal refusal to rent spaces to singles, B, a practice where banks refuse loans based on neighborhood demographics, C, fair pricing adjustments for underserved areas, or D, providing incentives for low-income housing construction? The answer is B, a practice where banks refuse loans based on neighborhood demographics. Redlining is a discriminatory practice where services, like loans, are denied on the racial or ethnic characteristics of an area, violating fair housing laws aimed at ensuring equal opportunities. What is the role of the Tennessee Human Rights Commission in enforcing fair housing laws? Is it A, issuing building permits, B, adjudicating housing disputes, C, investigating discrimination complaints, or D, setting real estate market prices? The answer is C, investigating discrimination complaints. The Tennessee Human Rights Commission investigates complaints of housing discrimination to enforce state and federal fair housing laws. It ensures compliance by landlords and real estate professionals with these laws. Which of the following practices would likely violate Tennessee's fair housing laws? Is it A, refusing to rent to a smoker, B, offering discounts to married couples, C. Denying rental based on national origin. Or D. Limiting occupancy to 2 tenants per room. The answer is C. Denying rental based on national origin. Under Tennessee fair housing laws, discrimination based on national origin is prohibited. Landlords must ensure their practices do not discriminate against protected classes, including national origin. Real estate contracts in Tennessee. What is the primary purpose of a real estate contract in Tennessee? Is it A. to secure a loan for the buyer, B. to legally bind both parties to a real estate transaction, C. to provide a property inspection report, or D. to determine property zoning laws? The answer is B. to legally bind both parties to a real estate transaction. In Tennessee, a real estate contract primarily serves to legally bind both buyer and seller to the terms of the real estate transaction, setting out specifics like the sales price and closing date. Who is typically responsible for drafting a real estate sales contract in Tennessee? Is it A. the buyer's attorney, B. the seller's attorney, C. the real estate agent, or D. the lender? The answer is C. the real estate agent. In Tennessee, real estate agents commonly draft the sales contracts, although attorneys may be consulted to review terms or handle complex issues. In Tennessee, what is the cooling-off period for a real estate contract after signing? Is it A. no specific cooling-off period, B. 3 business days, C. 7 calendar days, or D. 30 calendar days? The answer is A. no specific cooling-off period. Tennessee real estate contracts do not include a statutory cooling-off period. Once an agreement is signed, it is generally binding unless agreed otherwise by the parties. What must be included in a Tennessee real estate contract for it to be considered legally enforceable? Is it A. a handshake agreement, B. a written offer and acceptance, C. only the buyer's signature, or D. an appraisal report? The answer is B. a written offer and acceptance. A Tennessee real estate contract must be in writing and include a clear offer and acceptance for it to be legally enforceable, thereby meeting the state's statute of frauds requirements. How long is a typical contingency period in a Tennessee real estate contract? Is it A. 5 years, B. 7 days, C. 90 days, or D. no set length, it's variable? The answer is B. days. The contingency period in Tennessee real estate contracts often lasts about 7 days, but actual periods can vary based on the contract terms agreed upon by the parties. What is a common element that must be present for a real estate contract to be enforceable in Tennessee? Is it A. oral agreement, B. mutual consent, C. multiple offers, or D. listing price? The answer is B. mutual consent. Mutual consent, or agreement between the parties, is essential for a real estate contract to be legally binding and enforceable under Tennessee law. Which party is generally responsible for ensuring contingencies in a Tennessee real estate contract are fulfilled? Is it A. seller, B. buyer, C. real estate agent, or D. title company? The answer is B. buyer. The buyer generally handles contingencies related to inspections, financing, and appraisal to proceed with the purchase, according to Tennessee real estate practice.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsey.
Disclosures required by Tennessee law. Which disclosure is mandatory for sellers under Tennessee law when transferring residential property? Is it A. lid-based paint disclosure, B. property condition disclosure, C. asbestos presence disclosure, or D. flood zone disclosure? The answer is B, property condition disclosure. The Tennessee Residential Property Condition Disclosure Act mandates that sellers furnish a property condition disclosure statement to prospective buyers of single-family residential real property to disclose known material defects. What is the required time frame for disclosing a property condition in Tennessee? Is it A, at the time of closing, B, within 24 hours of signing the contract, C, prior to the signing of a purchase agreement, or D, anytime during the negotiation? The answer is C, prior to the signing of a purchase agreement. Under Tennessee law, sellers are required to provide property disclosures before the buyer signs any purchase agreement, ensuring the buyer is fully informed of property conditions prior to commitment. What must a seller disclose about the presence of a neighbor's zoning violation? Is it A, it must be disclosed if the seller has actual knowledge of the violation, B, it only needs to be disclosed if the property is a commercial entity, C, no disclosure is ever required for neighboring issues, or D, disclosure of such information is at the seller's discretion? The answer is A, it must be disclosed if the seller has actual knowledge of the violation. Tennessee law requires that sellers disclose any known adverse facts that would significantly affect the value or desirability of the property, including neighboring zoning violations, if known. When is a seller exempt from providing a property disclosure statement in Tennessee? Is it A, when selling a newly constructed home, B, when transferring property by will, C, when the buyer waives the disclosure, or D, when selling a house as is? The answer is A, when selling a newly constructed home. In Tennessee, property disclosure statements are not required for newly constructed homes, as these typically come with warranties and other forms of buyer protection. How does Tennessee law handle lead paint disclosures? Is it A, it follows federal regulations for homes built before 1978, B, it has additional state-specific requirements for all homes, C, it is mandatory for all homes regardless of age, or D, there is no disclosure requirement for lead paint in Tennessee? The answer is A, it follows federal regulations for homes built before 1978. Tennessee complies with the Federal Residential Lead-Based Paint Hazard Reduction Act, which mandates lead disclosure for any pre-1978 constructed homes to protect buyers from health risks associated with lead exposure. Under Tennessee law, what must sellers disclose about radon gas when selling a residential property? Is it A, radon testing must have been completed within the last year, B, buyers must be informed about the risks of radon gas presence, C, a professional radon mitigation system must be installed, or D, no disclosure about radon gas is required? The answer is B, buyers must be informed about the risks of radon gas presence. Tennessee law mandates that sellers disclose any known risk related to radon gas to potential buyers. This communication is crucial as radon is a health hazard that can affect air quality indoors. In Tennessee, which document is a buyer supposed to receive regarding property condition before closing a property transaction? Is it A, home inspection report, B, property condition disclosure statement, C, appraisal document, or D, mortgage disclosure? The answer is B, property condition disclosure statement. The property condition disclosure statement is required by Tennessee law to inform buyers of any known issues with the property itself before completing a transaction. This mitigates unforeseen issues post-purchase. Transfer of title in Tennessee. What type of deed is commonly used in Tennessee to provide the greatest level of protection for the grantee? Is it A, quitclaim deed, B, general warranty deed, C, special warranty deed, or D, bargain and sale deed? The answer is B, General warranty deed. In Tennessee, a general warranty deed provides comprehensive assurance to the buyer that the title is free from any defects through its history, making it the most protective deed type. Which type of ownership transfer could result in ownership without a formal title document being recorded? Is it A, adverse possession, B, gift deed, C, tax sale, or D, foreclosure? The answer is A, adverse possession. Adverse possession in Tennessee can result in ownership if uninterrupted possession continues for a statutory period without the need for a recorded title transfer. In Tennessee, what is the purpose of a recording in real estate transactions? Is it A, to generate tax revenue, B, to provide public notice of the property transfer, C, to validate the legality of the deed, or D, to ensure the property is insured? The answer is B, to provide public notice of the property transfer. Recording a deed in Tennessee provides public notice of a property's ownership change, offering priority over subsequent claims and protecting the new owner's rights under the law. What is required for a deed to be legally effective in transferring title in Tennessee? Is it A, notarization, B, consideration, C, delivery and acceptance, or D, recording? The answer is C, delivery and acceptance. For a deed to effectively transfer title in Tennessee, it must be delivered by the grantor and accepted by the grantee. This ensures mutual consent in the transaction. Which element is not necessary for a valid deed in Tennessee? Is it A, grantor's signature, B, legal description of the property, C, grantee's signature, or D, consideration? The answer is C, grantee's signature. In Tennessee, a deed does not require the grantee's signature to be valid. Essential elements include the grantor's signature, legal description, and delivery with acceptance. Which element is crucial for a deed to be considered valid for transferring title in Tennessee? Is it A, the presence of a seal, B, delivery and acceptance, C, a notary's affidavit, or D, the property owner's signature? The answer is B, delivery and acceptance. In Tennessee, for a deed to effectively transfer title, it must be delivered to and accepted by the grantee. This ensures the grantee acknowledges the change of ownership, making the transfer legally binding. What must be included in a deed for it to accurately define the property being transferred in Tennessee? Is it A, general property address, B, legal description of the property, C, previous owner's consent, or D, assessor's parcel number? The answer is B, legal description of the property. The legal description in a deed is crucial as it defines the property's boundaries precisely. In Tennessee, as elsewhere, this detail ensures the deed clearly delineates the exact area being transferred. Earnest money and escrow in Tennessee. What is the purpose of earnest money in a Tennessee real estate transaction? Is it A, it serves as a loan to the buyer, B, it secures the buyer's interest in the property, C, it pays for the seller's closing costs, or D, it compensates the real estate agent? The answer is B, it secures the buyer's interest in the property. Earnest money is a deposit made to demonstrate a buyer's commitment in a real estate transaction. It is held in escrow and not used as compensation or a loan. Which party is typically responsible for holding earnest money in a Tennessee real estate transaction? Is it A, the seller, B, the buyer, C, a licensed real estate broker, or D, the mortgage lender? The answer is C, a licensed real estate broker. In Tennessee, a licensed real estate broker commonly holds earnest money in an escrow account, ensuring neutral and secure handling until the transaction closes. What happens to the earnest money if a real estate transaction falls through due to a contingency in Tennessee? Is it A, the seller automatically keeps it? B, the buyer forfeits it to the state? C, it is returned to the buyer? Or D, it goes towards future real estate taxes? The answer is C, it is returned to the buyer. In Tennessee, if a contingency is not met, the earnest money is usually refunded to the buyer, illustrating the contract's protective structure for such situations. Under Tennessee law, within what time frame must earnest money be deposited into an escrow account? Is it A, immediately upon receipt? B, within 3 calendar days? C, within 7 business days? Or D, by the closing date of the agreement? The answer is B, within 3 calendar days. Tennessee real estate law mandates earnest money to be placed in escrow within 3 calendar days of its receipt, ensuring proper handling and deposit in a timely manner. What legal document typically governs the disbursement of earnest money in Tennessee? Is it A, the property title? B, the purchase and sale agreement? C, the home inspection report? Or D, the buyer's financial statement? The answer is B, the purchase and sale agreement. The Tennessee Purchase and Sale Agreement specifies how earnest money is handled and disbursed, including contingencies and conditions that trigger refunds or forfeitures. In Tennessee, who is primarily responsible for managing disputes over earnest money in a real estate transaction? Is it A, the buyer's agent? B, the Tennessee Real Estate Commission? C, the escrow holder? Or D, the seller's attorney? The answer is C, the escrow holder. In Tennessee, the escrow holder manages disputes over earnest money. They follow the terms of the purchase agreement and state laws to ensure compliance with real estate transaction requirements. What action should be taken if the earnest money is not deposited into escrow according to Tennessee law? Is it A, terminate the contract immediately? B, notify the Tennessee Real Estate Commission? C, consult the terms of the purchase contract? Or D, report to local law enforcement? The answer is C, consult the terms of the purchase contract. Failure to deposit earnest money is addressed by consulting the purchase contract, which contains specific remedies or actions. This may involve negotiation, amendment, or other legal remedies per Tennessee law.
Notice the code in the corner? When you're stumped by a question, enter it at birdsey.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Tennessee real estate taxes. What type of property is typically subject to Tennessee's property tax? Is it A, personal property only? B, real property? C, vehicles only? Or D, livestock? The answer is B, real property. In Tennessee, property taxes primarily apply to real property, including land and buildings. These taxes are administered at the county level and contribute significantly to local government funding. Who is responsible for determining the assessed value of a property in Tennessee? Is it A, the state treasurer? B, the county appraiser? C, the governor's office? Or D, the State Board of Equalization? The answer is B, the county appraiser. In Tennessee, it's the county appraiser's responsibility to assess the value of properties for tax purposes. The appraisal affects the tax amount property owners must pay annually. How often are property taxes typically reassessed in Tennessee? Is it A, annually? B, every 2 years? C, every 4 years? Or D, every 10 years? The answer is C, every 4 years. Property reassessment cycles in Tennessee are typically set at 4-year intervals. This helps ensure assessments are reflective of real market conditions over a reasonable time frame. What is the principal purpose of collecting property taxes in Tennessee? Is it A, to fund state highways, B, to finance local government services, C, to support federal programs, or D, to provide business loans? The answer is B, to finance local government services. Property taxes collected in Tennessee predominantly support local government functions, such as financing public schools, police, fire departments, and other municipal services essential to community welfare. What happens if a property owner fails to pay property taxes in Tennessee? Is it A, the property is immediately seized by the government, B, the property owner is fined and jailed, C, the property may be subject to a tax lien and possible sale, or D, the taxes are forgiven after 5 years? The answer is C, the property may be subject to a tax lien and possible sale. If property taxes in Tennessee remain unpaid, a lien may be placed on the property. Continued non-payment can lead to auctioning the property through a tax sale to recover arrears. What is the general basis for the assessment of property taxes in Tennessee? Is it A, market value of the property, B, assessed value determined by county assessors, C, sale price of the property, or D, fair rental value? The answer is B, assessed value determined by county assessors. In Tennessee, property taxes are primarily based on the assessed value set by county assessors, reflecting a percentage of the estimated market value. Which type of property is exempt from property taxes in Tennessee? Is it A, vacant properties, B, religious institutions, C, farms under cultivation, or D, commercial properties? The answer is B, religious institutions. Tennessee law provides property tax exemption for properties used primarily for religious, charitable, or educational purposes, including religious institutions. Tennessee real estate licensing and regulation. Who is responsible for regulating real estate licensing in Tennessee? Is it A, Tennessee Real Estate Commission, B, Department of Commerce, C, Housing Authority of Tennessee, or D, Federal Trade Commission? The answer is A, Tennessee Real Estate Commission. The Tennessee Real Estate Commission, TREC, is in charge of issuing licenses, ensuring compliance with state regulations, and managing real estate professionals in the state. How often must a Tennessee real estate license be renewed? Is it A, annually, B, every 2 years, C, every 3 years, or D, every 5 years? The answer is B, every 2 years. In Tennessee, real estate licenses are renewed every 2 years. Licensees must complete continuing education requirements to maintain an active status. What minimum age is required to obtain a real estate license in Tennessee? Is it A, 18 years old, B, 21 years old, C, 25 years old, or D, 16 years old? The answer is A, 18 years old. The Tennessee Real Estate Commission stipulates that applicants must be at least 18 years old to be eligible for a real estate license. What is required before beginning the pre-license course for a Tennessee real estate license? Is it A, background check, B, license examination, C, sponsorship by a broker, or D, proof of residency? The answer is A, background check. Before enrolling in a pre-license course, Tennessee requires a criminal background check as part of the ethical requirements for real estate professionals. Which document must be filed with the Tennessee Real Estate Commission for license activation? Is it A, broker affiliation form, B, listing agreement, C, deed of trust, or D, purchase contract? The answer is A, broker affiliation form. To activate a real estate license in Tennessee, the broker affiliation form must be submitted demonstrating the licensee's association with a certified real estate broker. What is the required exam passing score to obtain a real estate license in Tennessee? Is it A, 70%, B, 75%, C, 80%, or D, 85%? The answer is C, 80%. The Tennessee Real Estate Commission mandates a minimum passing score of 80% on the real estate licensing exam to ensure candidates have a sufficient understanding of state laws and practices. What is the minimum education requirement for an initial real estate salesperson license in Tennessee? Is it A, high school diploma or equivalent, B, associate degree, C, bachelor's degree, or D, graduate degree? The answer is A, high school diploma or equivalent. The state of Tennessee mandates that applicants for a real estate salesperson license must have at least a high school diploma or equivalent to qualify for licensure. Tennessee Real Estate Commission, TREC. What is the primary function of the Tennessee Real Estate Commission, TREC? Is it A, to create real estate advertising regulations, B, to establish and enforce licensing requirements for real estate professionals, C, to manage the multiple listing service MLS database, or D, to provide loans for real estate purchases? The answer is B, to establish and enforce licensing requirements for real estate professionals. TREC is tasked with ensuring compliance with the Tennessee Real Estate Broker License Act of 1973. Its primary role involves setting licensing education requirements, issuing licenses, and enforcing real estate laws. Who appoints the members of the Tennessee Real Estate Commission? Is it A, Tennessee Association of Realtors, B, Tennessee State Legislators, C, the Governor of Tennessee, or D, current TREC members? The answer is C, the Governor of Tennessee. TREC members are appointed by the Governor of Tennessee to ensure that the Commission reflects the public interest and adheres to state real estate statutes. How often must real estate licenses be renewed in Tennessee? Is it A, every year, B, every 2 years, C, every 3 years, or D, every 5 years? The answer is B, every 2 years. In Tennessee, real estate licenses must be renewed every 2 years. This regulation ensures that professionals maintain an updated understanding of real estate practices and legal changes. What is necessary for a licensee to remain active in Tennessee? Is it A, passing an annual exam, B, attending monthly commission meetings, C, completing continuing education requirements, or D, managing a real estate office? The answer is C, completing continuing education requirements. TREC mandates completion of continuing education to ensure real estate professionals are knowledgeable about industry changes and legal requirements, maintaining the license's active status. Which act gives TREC its regulatory authority over real estate professionals in Tennessee? Is it A, Tennessee Fair Housing Act, B, Tennessee Real Estate Broker License Act of 1973, C, Tennessee Landlord and Tenant Act, or D, Tennessee Homestead Act? The answer is B, Tennessee Real Estate Broker License Act of 1973. The Tennessee Real Estate Broker License Act of 1973 sets the framework for TREC's oversight and authority, covering licensing requirements, professional conduct, and the enforcement of disciplinary actions. Let's continue with a review of Tennessee real estate finance. Loan fundamentals. What is the purpose of a promissory note in real estate finance? Is it A, to act as a deed for the property, B, to serve as a payment schedule, C, to convey ownership rights, or D, to serve as a borrower's promise to repay a loan? The answer is D, to serve as a borrower's promise to repay a loan. A promissory note is a financial instrument that includes the borrower's promise to repay the loan under specified terms. It is not used to transfer ownership or act as a deed. Which of the following best describes an amortized loan? Is it A, a loan repaid in equal installments over time? B, a loan with fluctuating interest rates? C, a loan repaid in a lump sum at the end of the term? Or D, a loan with interest-only payments initially? The answer is A, a loan repaid in equal installments over time. An amortized loan involves scheduled periodic payments covering both principal and interest, ensuring the entire loan is paid off by the end of its term as per the loan agreement. In Tennessee real estate finance, what does a lien represent in relation to a property? Is it A, ownership of the property? B, a lender's claim to the value of the property? C, the sale price of the property? Or D, the assessed value of the property? The answer is B, a lender's claim to the value of the property. A lien is a legal right or interest that a lender has in the borrower's property, granted until the debt obligation is satisfied. What does an escrow account typically hold in a real estate transaction? Is it A, interest payments due to the lender? B, the down payment made by the buyer? C, funds for property taxes and homeowners insurance? Or D, rent payments from tenants? The answer is C, funds for property taxes and homeowners insurance. In real estate, an escrow account is used by lenders to hold borrowers' funds for property taxes and homeowners insurance, ensuring timely payments. Which federal agency provides oversight of the secondary mortgage market? Is it A, the Federal Deposit Insurance Corporation, FDIC? B, the Federal Housing Finance Agency? C, the Consumer Financial Protection Bureau, CFPB? Or D, the National Credit Union Administration, CUA? The answer is B, the Federal Housing Finance Agency. The Federal Housing Finance Agency, FHFA, oversees Fannie Mae, Freddie Mac, and the Federal Home Loan Banks, critical players in the secondary mortgage market. What is a key function of the secondary mortgage market in Tennessee real estate finance? Is it A, safeguarding buyers' cash reserves? B, facilitating stock trades related to real estate? C, providing liquidity to primary lenders? Or D, calculating property tax rates? The answer is C, providing liquidity to primary lenders. By purchasing existing loans from primary lenders, the secondary mortgage market supplies liquidity, thereby promoting mortgage lending. This function is crucial for sustaining the mortgage industry's flow of capital. In Tennessee, what is the role of a trustee in a deed of trust? Is it A, the trustee is the borrower? B, the trustee maintains title to the property? C, the trustee is responsible for setting interest rates? Or D, the trustee provides insurance against the loan default? The answer is B, the trustee maintains title to the property. In a deed of trust, the trustee holds the title to the property until the borrower repays the loan, ensuring the lender can reclaim the property through foreclosure if necessary.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
Loan. Which of the following loan types is typically not backed by a government entity? Is it A, conventional loan? B, the Federal Housing Administration, FHA loan? C, Veterans Affairs, VA loan? Or D, the U.S. Department of Agriculture, USDA loan? The answer is A, conventional loan. Conventional loans are private loans not insured by the government, unlike FHA, VA, and USDA loans, which have government backing, providing certain guarantees and insurance. What is a distinctive feature of a VA loan? Is it A, no down payment requirement, B, subsidized interest rate, C, mandatory PMI, or D, higher credit score requirement? The answer is A, no down payment requirement. VA loans available to eligible veterans often require no down payment and do not have PMI, making them a cost-effective option for those who qualify. What is one advantage of an FHA loan? Is it A, reduced closing costs, B, no income limits, C, available only to first-time buyers, or D, no credit score requirement? The answer is A, reduced closing costs. FHA loans often provide the advantage of reduced closing costs, which is beneficial to buyers needing lower upfront expenses. These loans are designed to help buyers afford homes more easily. Which loan type requires a funding fee? Is it A, Veterans Affairs VA loan, B, conventional loan, C, the Federal Housing Administration FHA loan, or D, the U.S. Department of Agriculture USDA loan? The answer is A, Veterans Affairs VA loan. VA loans require a funding fee. This fee helps support the VA loan program and can vary depending on the borrower's circumstances, such as service history and down payment. What is the primary purpose of PMI in conventional loans? Is it A, to ensure lenders against borrower default on loans with less than 20% down, B, to provide tax benefits to borrowers, C, to reduce interest rates, or D, to cover repair costs? The answer is A, to ensure lenders against borrower default on loans with less than 20% down. Private mortgage insurance, PMI, is required by lenders to protect against default when a borrower puts down less than 20% of the home's value, reducing the lender's risk in case of loan default. Which loan type is specifically designed to assist low to moderate income borrowers to purchase homes with a low down payment? Is it A, conventional loan, B, the Federal Housing Administration FHA loan, C, Veterans Affairs VA loan, or D, jumbo loan? The answer is B, the Federal Housing Administration FHA loan. The FHA loan is insured by the Federal Housing Administration and is meant to help low to moderate income families purchase homes with affordable down payments. Loan qualifications. What is the minimum credit score typically required for conventional loans in Tennessee? Is it A, 620, B, 580, C, 700, or D, 500? The answer is A, 620. Conventional loans generally require a minimum credit score of 620, according to most lenders' standards. Regulations are subject to change, but this is a common threshold used across the financial sector. Which document is typically required to verify a borrower's income during a home loan application process in Tennessee? Is it A, credit report, B, pay stubs, C, rental agreement, or D, bank statement? The answer is B, pay stub. Lenders often require pay stubs as documentation to verify income. This ensures the borrower can afford the mortgage payments. Requirements may vary by lender, but generally focus on income stability. What is a common loan-to-value (LTV) ratio limit for conventional loans without requiring private mortgage insurance (PMI) in Tennessee? Is it A, 80%, B, 90%, C, 70%, or D, 85%? The answer is A, 80%. Conventional loans generally require PMI if the LTV exceeds 80%. This insurance protects lenders, not borrowers. The 80% ratio is a common threshold for avoiding this extra cost. Which of the following describes the role of the USDA loan for properties in Tennessee? Is it A, supports urban home purchases, B, offers veterans special mortgage conditions, C, supports low-income rural homebuyers, or D, allows refinancing without income verification? The answer is C, supports low-income rural homebuyers. USDA loans provide aid to low to moderate income homebuyers in rural areas, aiming to encourage development. These loans often offer advantageous interest rates and do not require a down payment. How does the Tennessee Housing Development Agency assist first-time homebuyers? Is it A, grants for home renovations, B, first-time purchase grants, C, programs for down payment assistance, or D, waiving property taxes? The answer is C, programs for down payment assistance. The Tennessee Housing Development Agency, THDA, supports first-time homebuyers primarily through down payment assistance. These programs aim to make home buying more accessible for residents with various financial backgrounds. What percentage of the purchase price is typically required as a down payment for an FHA loan in Tennessee? Is it A, 3.5%, B, 5%, C, 10%, or D, 20%? The answer is A, 3.5%. FHA loans provide an option for homebuyers to enter the market with lower down payment requirements, usually around 3.5%, which makes them more accessible for individuals with limited capital. The loan application process. What is the primary purpose of a credit report during the loan application process? Is it A, to verify identity, B, to assess the applicant's financial liability, C, to determine the applicant's creditworthiness, or D, to verify employment history? The answer is C, to determine the applicant's creditworthiness. A credit report is vital in evaluating a borrower's creditworthiness, showcasing their ability to repay loans based on past financial behavior. It helps lenders decide on granting credit or not. Compliance with regulations of authorities like the state's Real Estate Commission ensures accuracy and fairness. Which document is primarily used to verify the applicant's income during the loan application process? Is it A, tax return, B, credit report, C, rental contracts, or D, mortgage note? The answer is A, tax return. Lenders require tax returns from applicants to verify steady and reliable income, ensuring the capacity to make regular loan payments. This method is standard and varies slightly by regulatory authority like Tennessee Real Estate Commission guidelines. What is the significance of the loan estimate in the loan application process? Is it A, to determine the final interest rate, B, to offer a detailed overview of closing costs, C, to confirm the property appraisal value, or D, to finalize loan terms? The answer is B, to offer a detailed overview of closing costs. The loan estimate is crucial for transparency, providing borrowers an informed overview of expected costs early in the process, promoting fairness and compliance with regulations like those by the Consumer Financial Protection Bureau, CFPB. In the loan application process, why might a lender require additional documentation from a borrower? Is it A, to fill gaps in underwriting requirements, B, to speed up the loan approval process, C, to reduce the interest rate, or D, to confirm personal references? The answer is A, to fill gaps in underwriting requirements. When gaps or inconsistencies exist in a loan application, additional documentation ensures thorough assessment and compliance with underwriting standards, reducing lender risk. Guidelines may be influenced by regulatory bodies like Tennessee's Real Estate Commission. What role does the debt-to-income DTI ratio play in the loan application process? Is it A, it sets the loan amount, B, it impacts the loan approval decision, C, it influences the property's appraisal value, or D, it determines the applicant's credit score? The answer is B, it impacts the loan approval decision. The DTI ratio is a key metric for lenders assessing a borrower's ability to manage monthly debt payments. It directly influences approval decisions by comparing debt obligations to income, ensuring alignment with regulatory standards such as those from the CFPB. What is the purpose of a pre-approval letter during the loan application process? Is it A, to guarantee loan approval? B, to showcase the maximum loan amount a buyer can borrow? C, to replace the loan estimate? Or D, to confirm the sale price of the property? The answer is B, to showcase the maximum loan amount a buyer can borrow. A pre-approval letter indicates the lender's preliminary agreement to lend a specific amount, subject to final approval conditions. This helps buyers understand their potential budget and strengthens their purchase offer. Underwriting for Tennessee real estate. In Tennessee real estate finance, what key factor is considered by underwriters when evaluating a borrower's ability to repay a loan? Is it A, debt-to-income ratio? B, property location? C, property zoning? Or D, curb appeal? The answer is A, debt-to-income ratio. Underwriters focus on the debt-to-income ratio because it directly reflects the borrower's financial ability to handle new and existing obligations. Tennessee underwriters use this factor to approve or deny mortgage loans. Which document is most critical for an underwriter to verify a borrower's steady income in Tennessee real estate transactions? Is it A, pay stubs? B, credit report? C, home appraisal? Or D, bank statement? The answer is A, pay stubs. Pay stubs are essential for underwriters in Tennessee to confirm declared income and assess the borrower's salary consistency, crucial for loan approval. During the underwriting process in Tennessee, which factor could cause an application to be flagged for additional verification? Is it A, unverified employment? B, high property taxes? C, low property appraisal? Or D, strong credit history? The answer is A, unverified employment. In Tennessee, underwriters must verify employment to ensure borrowers can meet financial obligations. Failure to verify employment can jeopardize the loan approval process, requiring more information. What documentation do Tennessee underwriters usually require to verify a self-employed borrower's income? Is it A, 2 years of tax returns? B, 1 year of pay stubs? C, employment contract? Or D, credit card statements? The answer is A, 2 years of tax returns. Tax returns from the past 2 years give underwriters a complete picture of income stability and amount for self-employed borrowers in Tennessee, essential for making informed lending decisions. Why might an underwriter in Tennessee require a larger down payment from a borrower? Is it A, poor credit history? B, low income? C, property age? Or D, strong employment history? The answer is A, poor credit history. Underwriters in Tennessee may require larger down payments for borrowers with poor credit histories to reduce lender risk and compensate for the increased likelihood of default. Which of the following is a primary concern for underwriters when evaluating property value in Tennessee real estate transactions? Is it A, neighbors' property values? B, property's market value? C, prior owner's investment in the property? Or D, the zoning classification of the property? The answer is B, property's market value. Underwriters focus on the property's market value to determine its suitability as collateral for a loan. The market value directly impacts loan-to-value ratios, which are critical in assessing loan risk. What factor would most likely lead to a mortgage loan application being declined during the underwriting process in Tennessee due to credit issues? Is it A, high credit score? B, recent bankruptcy filing? C, multiple lines of credit in good standing? Or D, a long history with no credit applications? The answer is B, recent bankruptcy filing. A recent bankruptcy is a major red flag for underwriters as it indicates financial instability, According to Tennessee underwriting guidelines, recent bankruptcy can lead to immediate application denial. Loan closing. What document signifies the end of a real estate transaction at closing? Is it A, mortgage, B, closing disclosure, C, deed of trust, or D, settlement statement? The answer is D, settlement statement. The settlement statement details all the financial components at the end of a real estate transaction, confirming its completion. It is signed at closing as required by the Consumer Financial Protection Bureau, CFPB. Which party is typically responsible for preparing the deed in a Tennessee real estate transaction? Is it A, seller, B, buyer, C, lender, or D, title company? The answer is A, seller. In general, the seller is responsible for preparing the deed in a Tennessee real estate transaction to ensure it's ready for closing, typically in consultation with their attorney. What is the purpose of an escrow account during loan closing? Is it A, to hold earnest money, B, to finalize loan interest rates, C, to register the transaction with the county, or D, to appraise the property value? The answer is A, to hold earnest money. An escrow account temporarily holds funds, such as earnest money, until the transaction conditions are fulfilled, ensuring a secure transaction for both parties at closing. Who typically conducts the closing of a real estate transaction in Tennessee? Is it A, real estate agent, B, lender, C, title company or attorney, or D, buyer? The answer is C, title company or attorney. In Tennessee, either an attorney or title company typically conducts the real estate closing, ensuring all documents are correctly executed and funds are transferred. What is title insurance and its purpose in a real estate transaction? Is it A, it ensures the physical condition of the property, B, it protects against future property tax increases, C, it covers past title issues and defects, or D, it guarantees mortgage approval? The answer is C, it covers past title issues and defects. Title insurance provides protection against claims or legal issues related to past ownership of the property, ensuring the buyer's clear title. This is an essential part of risk management in real estate. Which document outlines the final financial details between the borrower and lender at closing in Tennessee real estate transactions? Is it A, closing disclosure, B, promissory note, C, deed of trust, or D, purchase agreement? The answer is A, closing disclosure. The closing disclosure is a critical document under the TREC rule, detailing loan terms, projected monthly payments, and closing costs. It ensures transparency for the borrower before the transaction is finalized. What is the purpose of a deed in a Tennessee real estate transaction? Is it A, to convey ownership from seller to buyer, B, to finance the buyer's purchase, C, to record property tax payments, or D, to negotiate contract terms? The answer is A, to convey ownership from seller to buyer. A deed is the primary document used to transfer property ownership in real estate transactions. In Tennessee, it is essential for legal transfer, recorded with local authorities to verify title change. Tennessee mortgage disclosure requirements. What is required by the Tennessee Residential Property Disclosure Act regarding mortgage disclosures during the sale of residential property? Is it A, a complete list of all lien holders, B, disclosure of potential environmental hazards, C, disclosure of outstanding or unpaid financial obligations related to the property, or D, a copy of the mortgage contract? The answer is C, disclosure of outstanding or unpaid financial obligations related to the property. The Tennessee Residential Property Disclosure Act mandates that sellers disclose existing financial obligations tied to the property, ensuring buyers are aware of any potential liabilities before purchasing. Which document outlines the specific loan terms to be disclosed to buyers under Tennessee mortgage requirements? Is it A, loan estimate form, B, offer to purchase agreement, C, appraisal report, or D, property title search? The answer is A, loan estimate form. The loan estimate form, as required by federal law, including within Tennessee, specifies estimated loan terms and closing costs to help buyers make informed decisions. Under what circumstances must a lender provide a closing disclosure to the borrower in Tennessee? Is it A, 5 days before closing, B, 1 day before closing, C, 3 business days before closing, or D, 7 business days before closing? The answer is C, 3 business days before closing. Under the TREC rule, which Tennessee follows, lenders must deliver the closing disclosure 3 business days before closing, ensuring buyers have time to review detailed loan costs and terms. Who is responsible for ensuring that the borrower receives accurate mortgage disclosures under Tennessee law? Is it A, the home seller, B, the buyer's real estate agent, C, the lender or mortgage broker, or D, the title company? The answer is C, the lender or mortgage broker. Lenders or mortgage brokers are mandated by law to provide accurate disclosures to borrowers. They ensure transparency and full disclosure of loan terms and conditions as per Tennessee and federal guidelines. What must be included in the Tennessee mortgage disclosure regarding adjustable rate mortgages? Is it A, the initial and maximum interest rates, B, the property's current market value, C, past interest rate fluctuations, or D, the expected tax benefits? The answer is A, the initial and maximum interest rates. Disclosure of the initial interest rate and potential rate adjustments is crucial for adjustable rate mortgages to ensure borrowers understand the variability in their future payments under Tennessee law. What key information must lenders include in the Tennessee mortgage loan estimate? Is it A, interest rate and monthly payment details, B, property's assessed value and tax rate, C, borrower's credit score and credit history, or D, details about previous owners? The answer is A, interest rate and monthly payment details. The loan estimate is designed to provide borrowers with clear insights into the loan terms, including interest rates and payment details, ensuring informed decisions. What is the maximum legal timeframe for delivering the closing disclosure to a borrower prior to closing in Tennessee? Is it A, 3 business days, B, 5 business days, C, 7 calendar days, or D, 1 business day? The answer is A, 3 business days. Under federal and state law, lenders must provide a closing disclosure at least 3 business days before closing to safeguard borrowers' review time.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit birdsey.ai for complimentary study sessions with Birdsey, your AI-powered study partner.